Welcome, everyone. Welcome. This is Tuesday, the 25th of March. Thank you for joining us. Today, we are going to go over some really specific things. So, for stock picking, of course, but also options. So we'll see what's important to look for in a stock, and then in the volatility to get to prepare your option strategy. So first, without further ado, I'd like to start with the acceleration. That's really the title of, uh, of our talk today, and additional metrics. So acceleration, I've been on the topic several times. I've talked about it, and I'd like to one more time rehash what's really important there. So first off, what we do at EPS Momentum is we track the stock and we generate an EM score every quarter, EM 9, 1, 6, 4, -1, and so on. Any EM score greater than 0 is great. If it's greater than 20, it's extraordinary. So focus on those companies that have a great EM score. Anything below 0 is just no momentum, no earning momentum at all. And then the price action, which is summarized in the market score, timing, momentum, and timing bias, those three indicators. When they're all above 0, you get something interesting and maybe something you can focus on. Below 0, just ignore them, ignore the stock, and that's it. And that signal box will lit up in red. So in the earning momentum part, what we do is we track earning per share and sales, two metrics. And they're both very important. Sales is very important and raw. Earning per share can be a little tweaked by accounting, but this is the earning per share street calculation, so it's a pretty refined earning per share. So that's important. The growth is very the crucial piece here. You want to track not the quarter-on-quarter growth from one quarter to the next, but really the acceleration between two quarters. But before the growth, you really want to focus on the growth from the previous year. So 2.93 compared to 3.23. That's what you want to focus on. So any ticker you type in, let's say NVIDIA, we can see a 71% growth. That's 0.52 compared to 0.89. That's a very, very impressive growth. But the previous quarter were even more impressive, 400, 500%, 100%, and 71%. The deceleration here is very visual. In the last 5 quarters, the stock has decelerated significantly, 88, 23, 300, 49, 31. So it's really decelerating fast. And we've seen it in the stock. The stock has been going really nowhere and flat. So that's something to notice. Sales, we can see the sales here. Sales number last year in the same quarter was 22,000. Now it's 29. That's a 78% growth. And the acceleration has been, decelerating, not accelerating, but decelerating slightly less, I guess. So maybe next quarter we get a positive acceleration. So this is very important to start with the matrix. That would be, if you do this, if you really focus on stock that have a high growth and high acceleration, you're really picking good stocks. Now, what the price is doing up or down for the week is something else. Timing is something else, but first focus on the great companies. So how do we get to great companies? Very quickly, you can click on best stocks if you want, and it goes straight to the screener at the bottom, and it will filter for EM greater than 20 and put in a series of filters. So very quickly, you can get 34 of the best stocks out there with best EM. The EM score also takes into account acceleration. So yeah, it's something very easy to do. 1 second, you click on one button, and you get all 30 stocks. I would like to go and start fresh with you. Just start with a default screener and really look at the matrix and how we can pick the right field for you. Earning per share growth from the quarter a year ago is one of the most important. Sales as well. So those two are very important. You can have the full definition here. And when you click on it, and we have it as a column here, you can move the column around. You can move the market cap as well. And I am going to make sure we have earning per share greater than, say, I don't know, maybe 10% or 11%, and sales, same thing, about 10%. So now we have 1,000 tickers, which is much better. Maybe a filter on market cap. You know what? I'm gonna leave the market cap as it is, and add more fields. So we talked about acceleration. This is a field for acceleration for sales, and this is a field for acceleration for earning per share. Again, you have the full definition here. So this is really the quarter-on-quarter acceleration, which is really on year-on-year, because each quarter of growth compares it to the previous year. So it's really the acceleration year-on-year that you're looking at here. So now what do we do here? Well, we just request acceleration to be positive. I mean, it's little to ask, but it's very important. And what we get is we get 551 stocks. Right there, we already have big names. Can recognize a few of them. We get the AMD and CDNS and ISRG. So yeah, so this is a good start. Picking great stocks. You can also really look at financials, and if you want to add some return on equity or debt level, that's also debt to common equity. That's a pretty famous filter you can put in. So say you don't want anything above 100, right? And now we have 422. You can also have return on equity, decent amount there, maybe 10%. Okay, now we have 229 names. So now we have companies that are not too in debt, extremely, very high earning per share growth. So very high earning growth, very high sales, and accelerating, at least flat. Let's put a little bit of acceleration here. Let's put like a 5% acceleration on both earning and sales. Let's see how that changes the picture. Right, so now we have 151 stocks that we can look at. We get Marvell Technology, for example. We can see the change, see how the growth was negative, became positive, and then it was accelerating for several quarters now. And the stock has been going up, and then all of a sudden EM32, there was a huge price drop here, and then maybe a turnaround. So yeah, this is our list, 150 names. We can reduce it. We can add more filters to it. One of the very popular filter that people would want to see is the revisions. So analysts revise their estimates on a regular basis. So if you focus on that gold curve here, this is the revision score. This is all the analysts that there's actually 13 analysts. We have a second data set, which is RS2. There's 23 analysts, and we've added a different curve, but you see they're both heading upward. So we have from two different sources revisions that are up, 76% up for the quarter, which is pretty pretty impressive. And you can also, by the way, put on the chart here. So click on data, and then you pull up the revision data set. And as you can see, the revision was negative, then turned positive. The stock went down, the revisions are positive. So that means what? That means that price action here was not about the stock, it was about the sector or deleveraging. But the revision is always up for these guys, for Marvell and the semi. So we get this, the revision. So where can we get it? Revision estimates is here. So it's change. So let me show you again. This is the change, and this is the actual value here. The value was 5.20. So it's a score that was 6, 6.8, 11.30, 12, and we've added 5.20 since the beginning of the quarter. So what I like to do is I can look at the percentage change, but I like to look at the actual value change, because this doesn't take into account any previous value. It's really raw, and it tells you how far analysts have increased their estimates. So of analyst revision for quarter 1, 2, year 1, and year 2. So now we have all these names sorted by the biggest revision. So Robinhood is one, and we can see the revisions are up the roof here, and price is rallying back on there. We have a good EM 22, and yeah, so this is a potentially good candidate to investigate. And then we have ACHR, SLN, ITCI. Let's click on this one. All right, this one has been looks to have been acquired, so let's skip this one. Xeris Pharma. There you go. So interesting. Now, the other thing that you can use is one field, which is the outperformance from the S&P. So a specific hidden field, hidden in the rough, that's this one. So it's the ratio of the stock to the S&P since the earning date. So it's the change of that ratio. So if the change is positive, I mean the stock has outperformed the S&P since the beginning of its quarter, right? So we can filter that, and that's it. Now we're down to 46 names. Now, these names are, good companies to focus on for your research, and you can go one by one and look at them and look at how they fared and build your own opinion on it. But then we're going to take it up a notch, and we are going to look at options. So on options, what we do is let's pick names that have options. So we actually have a filter here in the description. So we have a filter that says optionable here, and we will filter to yes. So we'll only take stocks that have options. Okay, looks like all of them had, so good. And second thing is we are going to have a look at, let's pick up let's filter by market cap. Let's pick a high market cap so we have good option signature here. Palantir, for example. Okay, so Palantir, let's clear up that chart. So this is a chart for the price for 12 months or 3 months. And this is the skew. So the skew for options is basically the difference in the difference in volatility between the puts and the calls. So if you imagine the option chain, you have the puts on one side, the calls on the other. They all have implied vol. Implied vol tend to be narrower in the middle There's an entire video that explains it, and maybe I go over one illustration. Yeah, this is the skew. Oops, sorry. Yeah, this is the skew. So the skew, you get puts on the side, calls on the other. This is how you build the volatility skew. Each percentage 43, 42, 52, and so on, or implied vols. So that's the implied vol per strike. So that's the money at the bottom. And the skew is really different between the put implied vol and the call implied vol. What does that mean? Implied vol is a translation of supply and demand. So when there's very, very high demand, people bid for, let's say, puts. If they bid for puts, that means that there's high implied vol. And if there's high implied vol, there's high demand. So there's more implied vol is really a translation or an indication of how in demand those options are. So if puts are more in demand than calls, that means that a portion of the market who trades option, they're more bearish than bullish. Conversely, if the calls are more expensive from a vol standpoint, they're more bullish than bearish. And then you have a series of configuration where if you want to go long or short, you have to buy with implied vol that is cheap or not, and we can go over this. So let's have a look at the historical vol and implied vol first. So the implied vol is in yellow, historical vol is in red. We can see that over time, implied vol is fairly high here. I mean, it's growing. It was higher. It's a little bit down now. You can look it up here. It's 28 percentile. So look at the 60-day as well. Historical vol is very high. Implied vol is 28. So implied vol is fairly. I mean, it's fairly. It's 28 percentile, right? So 61 vol, but 28 percentile. So implied vol is fairly affordable, I would say. So that means that you can be in a position to buy option, not sell them. You would sell them when the implied vol is very high. So we decided to sell some options, right? Now we need to pick the direction. Are we bullish? Are we bearish? What can we do with this? Well, first we pick great stocks. Okay, so far, and actually, you know what? Let's filter on volatility. So you would go into the volatility section of the screener, and you would look for, let's say, implied vol 60 days, and what you would want to look for is, actually, let's do implied vol 30 days percentile rank 1 year. So what I want is vol that are below 50 in percentile. Sorry. So those are fairly affordable vol. So AMD has a percentile of 5. We can look up what the implied vol is for AMD is 36. So implied vol is fairly affordable. So we would position ourselves into possibly buying some options there. And then the second thing is what direction, do we buy a put? Do we buy calls? So you would choose this by, looking at the skew. This is what everything is all about here. So the skew is 41 percentile, so it's fairly high up. That means the puts have been fairly expensive. I mean, it's close to the middle, I would say. But if we look at the skew slope, let me move into a 3 months region here. So the skew has been doing a top and maybe getting flat or higher up, but the skew slope is heading to a bearish scenario here, a very bearish scenario. If we look at the 60 days, it's a little bit more bullish, a little bit more neutral, I would say. The skew is high. It is fairly high, but it's a little bit more neutral. If we look at 3 month, the skew is plateauing, maybe heading down, or maybe returning back up. We don't really know. What we do know is that price is turning around here a little bit. So this is fairly neutral. So, I mean, I don't know how you can make a decision here, but this helps you decide for your options. So going long is what we said, but let's pick some other stock to see if we get a better result. All right, let's go with 30 days options. Let's have a look at the skew overall. So the skew is very low. We can look at it over a year. There's a little bit of a spike down there, but the skew is fairly low. For 3 month, skew is 12 percentile. It is bullish. The slope is down, so calls are possibly, it was putswear a little bit more expensive than calls, and then it slowly went down here. So calls are getting cheaper. As calls are getting cheaper, you would want to potentially, and because the volatility is fairly low, you want to potentially buy calls there. If you think that, well, it says it's very bullish here, but that's a possibility. So we define 3 things. So first, we pick great stocks, and we've applied earning momentum and acceleration. We've picked a very high revision, so Wall Street confidence in the name, and specifically turning around despite the market downturn that we experienced in the last few weeks. And thirdly, the options. So we looked at stocks that have low implied vol, so possibility of buying options, so buying a put or a call. And here you have candidates that are bullish and bearish, and you can buy a call or buy a put here. If the implied volatility was very high, you would have been in a position to rather sell options, so sell calls or sell puts. But here it's more of a buy stance that we've taken in that example. That's it. So, I mean, lots of things. You can filter for everything in the screener here. You can filter for the skew slope, the 30-day skew slope, 10 days. So if you want a skew that is dropping significantly, only negative skew slope, you get a few names: Monolithic Power System, right? So we got some bullish names here. We get some bearish positioning here, and so on. Another name here: neutral, bullish. So all the tools are there. You can really very quickly get, in 2 minutes, answer about great candidate for your research by clicking on best stocks. But you can also go very deep into the rabbit hole and use all these tools to assess the companies and the option position that you might open or not. All right. I hope it was useful, and let me know if you have questions. Support at EPSMomentum.com. Thank you very much for your time. Bye-bye.